And let's try that with volume. All right, good to see everyone. Welcome to Charts and Coffee. All right. Nothing like a mic that's off on a Friday morning. Options expiration Friday. And quick heads up on a concept of caution days and days that I choose not to day trade in the morning. My favorite hour of day trading, and by the way, those of you that have been wondering about day trading, is it something you do all day? Oh gosh, no way. One, it's really not effective, and two, it's an intense type of focus you need. And I believe that sticking to 1, maybe 2 hours at most is the most effective. So finding the most effective hour for my style was job number 1, and then focusing as best I can on that hour has worked out very, very well. A lot of you've learned that 9:30 to 10:35 window, just 1 hour and 5 minutes a day, is gonna set you up in the best way. Again, not everybody. Some folks love the pre-market, some folks love the Asian session, some folks love the afternoon session going into the close. I have found personally by studying my trades, studying my wins and losses, not just all my day trades, and not even by symbol, but by when the trade was entered, what time, and what the P&L is in that window. I realized very quickly that that is the hour and 5 minutes for me. And so those are things that are uncommon bits of advice that I never got, right? And I realized, oh, time of entry makes a difference. All right, circling back to a caution day, circling back to why I do not day trade on options expiration. There are actually 3 days that I have found the win rate that I have during that window doesn't merit my putting my capital at risk. One is end of quarter. End of quarter is kryptonite for me. We have to acknowledge that all days are not created equal for our approach. When we do that, we're being self aware as traders, and that is risk management. So, end of quarter, I will find something else to do. I try not even to be in my office for end of quarter morning, so I'm not tempted to day trade. The other one is non-farm. Non-farm is a coin toss. Sometimes I can trade the actual non-farm volatility using hourly price movement ranges, but after 9:30, oftentimes after a very high impact 8:30 hot zone, the mornings just sort of seem lethargic because the move's already been made. You can say the same about CPI and PCE, by the way, so study the days. The last one is options expiration. And I find that the follow through can be very tricky. Gang, it's not that the setups don't happen, it's that the follow through needed for me to realize a profit is oftentimes what's so frustrating. So have days that you say, you know what, this is just not a high probability day for me, and find something else to do, right? And that's one of those days for me. All right, with that being said, that's my game plan. My game plan is discipline to not put trades on in an environment where I do not historically, not, oh, remember that one time, not that, not the exception, but what's the rule, where I do not historically have an edge. All right, with that being said, as always, questions, phone lines are open for your requests. Got the trading room in the house. Good to see you all, as well as my folks on my YouTube channel, as well as a Simpler Trading YouTube channel. So let's get to it. All right, first up, Zane asks, let's see here. Let's move get some more chart area here going. All right, perfect. So Zane asks, how can I hold my day trades longer? I'm too tempted to protect my gains early, but hold till full stop out. Okay. What I have found about traders who are very eager to take a trade off the table when they go positive. And Zane, not your fault, and certainly you're not the only one. The idea that a lot of traders finally come upon an approach that's working for them after a prolonged period of frankly very trying, if not unprofitable trading, leads to that sort of mental approach. Like, thinking to myself, oh my gosh, I really like being up and I know what being down feels like. Let me just take the profit. I hear you. Baby steps. The first baby step is maybe don't trade every setup. Once you've learned that one that's maybe helping you turn the corner, watch it for a while. Go through the loop of seeing the trade trigger and maybe missing it, right? Maybe not taking it. And let that start to override the fear as the confidence and sort of maybe the frustration for not taking the trade starts to bubble up in you. That's one way to do it. So it's a mental trick. It's a mind game you're playing with yourself, on yourself. The other thing is get comfortable, maybe halfway to the first target, going to a break even. That might be one way to take these small steps to allow you to incrementally, go to the gym, if you will, and lift a little heavier a weight. It's not easy. It is going to be a process. Don't be tough on yourself. A lot of traders have gone through this and have come out the other side, and you can, Zane, as well. Yeah, no doubt about it. All right, next question is Brian. Crude oil. Sure, we can take a look at crude. All right, crude I'm on TradingView, by the way. I've been doing a lot of sessions on Thinkorswim, so rocking the TradingView chart. So let's take a look at the daily time frame for a moment. Crude has been in chop, and before the chop, we had a downtrend. So there's a little bit more bearishness in crude for two reasons. That reason right there, market structure, and the other reason is the resistance just in front of the mean and the resistance just at the 200 propulsion. We are in the bearish hemisphere. We have not established price action in a meaningful way above the 200 exponential. That's the equator. North of that is the bullish hemisphere. Not there yet. So not surprised to see crude a little weak. Let's look at the structure through the lens of the intraday chart. How long has crude been heading lower? I mean, this is taking us clear back to the 16th, Wednesday. I mean, we've just been heading systematically lower for some time. And then today, the 18th, you can see since 6:30 this morning, we're in a downtrend. So if you wake up at 6:35, we've got a downtrend. You wake up at 7:30, or that's when you look at crude, 7:30 Eastern, we've got a downtrend. So all those things put together, intraday weakness, and that bearish environment, generally speaking, on the daily, and you've got weakness. As far as support goes, let's go back to the daily. Pretty simple. Really looking forward. Brian, this is where I will start looking at MCL, CL options, CL futures, as well as the USO. And let me talk the futures for a moment, because I know there's a lot of traders that are very interested in the futures. And, one of the things that I love about the early part of my career was the fact that I started with futures, and I love trading futures. And I think they're a really cool market that a lot of folks don't have necessarily the right impression about. And it scares them. It should, for the leverage, not for the market that it is. So let's talk about some of the basics around trading crude oil. And the easiest way to start with, if you're going to trade crude oil longer term, daily time frame, which contract? So we've got to look at January, which is the F contract. That's number one. So MCLF or CLF. That's where the open interest, and I believe the volume now has also migrated to. And by the way, we have about a month left. And let me double check on the open interest. We've got 306,000 contracts in January, and we have, let's see here. Yeah. So we're out in January now. In fact, I would day trade crude in January. I would also swing trade crude. So we're talking January F contract for crude oil. You can look at USO as well, which is a somewhat thin, sometimes ETF alternative where you can play options on the what's known as the crude oil fund, the U.S. oil fund. Support is going to be waiting in two places. The -2 standard deviation, see that right there, as well as take a look at this Darvis support around 76.5. Brian, that's what I'd look for. Yeah, that's what I'd look for. All right, so why don't I day trade on expirations date? So Carlo, I hope that makes sense. We kind of went into that conversation. You might have caught me talking about that earlier this morning. So for the reasons that I listed, it just makes sense to be more cautious and not trade a day with a win rate doesn't justify putting my capital at risk. All right, and by the way, gang, every trader does have a caution day, whether they know it or not. Some traders, most traders don't know. They're just going to go at every day with an equal approach. But it's a lot like football season. Do I prepare for? I'm just going to pick any old team. Do I prepare for the Browns in the same way I might prepare for the, I don't know, who's doing well right now? Eagles, right? When we look at who's on our schedule, we prepare for each team differently if we're a football coach. It's really not that different as a trader. Every day is kind of a different team. Every day does present a different offense or defense that we are playing. And for that reason, acknowledging that every single day, every week, or even on the calendar, it's going to have a different risk type of environment, just acknowledging that. And the more that we're aware of that, the better we'll be able to protect our capital, which is job number one. All right. Is XLE setting up? It sure is trying, Larry. I do want to buy the dip on that one. And I do believe it's trying to set up a buy. And XLE, OIH, XOP, FCG, all those energy corners of the market, those are all the major ETF sector ETFs. Yeah, they're absolutely setting up. I do believe so. I agree. Next up, Jeffrey says, I've been looking to short Airbnb. I have not looked at this symbol at all. Okay. I've been looking to short Airbnb, but I have not got any clean setups yet. And I feel like you're missing the move. What do I think? All right. Cool question, Jeffrey. And thanks for the little bit of extra information there. I agree with you. Below the anchored volume weighted average price, the AVWAP, below the 200 exponential, my propulsion right here. We haven't been in a downtrend since mid-July, but the trend that preceded, for the most part, has been down. I would treat this, Jeffrey, as a choppy market that you are focusing on the overbought resistance from which to either short the stock or get long puts or whatever it is the strategy would be, but finding those opportunities at the ceiling. The closer we get to the mean on the V-score, so what would that look like? Jeffrey, if you want to know what the mean on the V-score signals shorts on the 15th of August, a short on the 14th of September, and anytime we get close to this thing, basically through most of the middle of October, those are the opportunities. The closer we are to the 200, those are the opportunities. If you're using something like a slow stochastic, which is my preference for overbought, oversold, price-based assessment, where's the ceiling, where's the floor, look for an overbought stochastic to accompany the price closing in at that 200. I think that's going to be your best shot, right? That's going to be the best pitch over the plate. So that's what I'm looking at there, Jeffrey. If I were to wanting to trade Airbnb, that's what I'd definitely do. All right, next up, Patrick, do options have an effect on crude as much as stocks? Any expiration is going to have a certain amount of effect. Sure. I don't think options on commodities get a pass at all. So sure, I think to a certain degree they will, because the open interest associated with different strikes is going to be the play. It doesn't matter if it's a stock, ETF, or futures contract. I agree. Yes, it typically does. Yeah. All right. Next up, and keep an eye where the open interest is thicker. And I even like when the open interest is thicker on both the put and the call side, right? So not just a lot of open interest on the call side or a lot of open interest on the put side, but rather both. And then I'll see where those thicker levels are, because that's where the attention is, right? Okay, next up, what's my take on Exxon? I want to do with Exxon the same thing that I want to do with XLE, which is I want to buy a dip. So my take on Exxon is oftentimes Exxon, Chevron, Exxon is oftentimes the first thing that I'll look at if I don't like the structure on the XLE. So for example, if Exxon pulls back and gives us an entry first, I might go with that because XLE and Exxon are going to do, for the most part, the same thing. Same thing goes with Chevron. And I will always keep an eye on Exxon and Chevron and even ConocoPhillips when we're looking at, there's a few of these more high concentration weighted stocks in the XLE. So that's the boats and tide, right? The tide being the broader index or the broader ETF, and the boats being the individual stock. But not all the boats are of the same size, right? Chevron and Exxon within the XLE are gigantic boats, if not ships, right, in terms of their weighting. And then as we go down the list of holdings, the boats get smaller, if you will. So I would look at Exxon as possibly a proxy to XLE if you don't like the XLE structure, right? So you get some choices there, Let's see. Shock for MES, so micro S&P. As a beginner, how much stop loss do you need to keep? Well, it depends on the setup, my friend. And as a beginner or not beginner, so as a beginner, I would say watch a symbol that you want to trade. I mean, I don't go, again, everyone's going to have a different definition of beginner, but I'm going to take a definition of a beginner as I've never traded futures before. And this is important, that I'm brand new to the charting platform and that trading execution platform that I'm using. A lot of traders underestimate the learning curve of the platform, setting the charts up and being able to execute limit and stop orders in that market. So beginner to me is new to all three of those things. I would say give yourself at least 2 weeks to acclimate yourself with the way that the MES moves, acclimate yourself to the economic calendar that's going to move MES, and then in that time also get fluent and comfortable, with the charting and order execution platform. That's what and that's even before we start talking about stop losses. Now, stop losses are going to vary with your strategy, right? If you're playing options in say the S&P versus the micro, you mentioned micro, so let's stick with that. Find out what the typical price movement ranges are. For me, that's a volatility conversation. So let me show you what I mean. If I head on over to the ES, which is the way that I would track the MES, I know that there's a certain amount of volatility and time-based support and resistance. That's number one for me to understand how and when to place a stop and the kind of volatility for the time of day that I will be dealing with in that symbol. We could do the same for Apple. We could do the same for crude oil, as you saw earlier. We could do the same for gold. Know the nature of the market for that time of day. Hourly price movement ranges, what I call the HPMRs, automate that whole process with a time-tested, over a decade of fine-tuning this thing. And that's where I will start thinking about stops. Volatility is a big part of that, my friend. Now, usually at some point, traders will just sort of reduce that to dollars. But before we determine what type of market we're dealing with, and then the dollars that we can allocate to, we need to know the kind of volatility that we're dealing with in that market. So I hope that makes sense, and terrific question. All right, Zane asked, do I use oversold slow stochastic on daily, do I use a slow stochastic? Yes. On a daily time frame, sure. If I'm trading a daily time frame in a chop and it's overbought or oversold would be a potential buy setup. Overbought would be a potential short or long put setup. Yeah, absolutely. Saying there, except for say an HPMR, which is an intraday tool, you will see the same settings. You will see the same indicators, and I use them in the same way on the 5-minute chart, the daily chart, and the weekly. And that's mandatory for me because anything less than that is curve fitting, right? We don't change settings from 5 to daily to weekly. We definitely don't change settings every now and again because that's curve fitting, by the way. And every new indicator developer goes through that. Someone's a new indicator developer when the settings keep changing. A slow stochastic for me, and I'll give you the settings right now, and for 20 years have been, because it's price-based, right? It's a price-based tool, is a 21K 3D. The overbought is 80, the oversold is 20. And that is what I will use on a weekly. That is what I will use on a daily, and that is what I will use on a 5 minute. And I will not change that. And absolutely, and I use it in the same way. All right, in the same way. All right, gang, and just like that, our time is up. Thank you, as always, for joining me for Charts and Coffee. We'll be back here at the Simpler Trading YouTube channel and my YouTube channel on Sunday at 6 p.m. Eastern for the weekly Raghee report, where we prepare for the week. Caution day, gang. Be careful. Options expiration can have a lot of shenanigans. So let's think first, not how much can I make, but how am I going to protect my capital, right? That is our job as traders. Does today's action and setups merit my putting my money at risk? And if that's a yes, that's one thing. If it's a no, gang, the markets will be open on Monday and we get to start all over again. All right. Now, by the way, daily time frames, no problem. I just won't day trade on options expiration. But we'll be taking a look at daily time frame setups this afternoon at the Ask Me Anything session, which will be broadcasted into the Simpler Futures room, as well as my Sector Secrets Mastery room. All right, gang, be good to each other. I will talk with you soon.